Hey guys, welcome back to our YouTube channel Accounts Guru Cool. Learn accounting online. So today we are here to discuss about the GRIR meaning and the proven reasons to have open entries. What are all the reasons is going to be there and why uh, we used to see the lots of balances in the GRIR account. What's the first meaning of the GRIR account? That's all we are going to discuss here. That's all is based on the experience and we identify the certain reasons. Because of that we are able to see the open balances into GRIR account and how we have to ensure that the balance is not going to be there. So before going to discuss what are all the reasons to have the open entries in the GRIR account, first let's discuss what's the mean by GRIR account. If you see here in this charts, you are able to, in these pictures, you are in the slides, you are able to see that the first step is going to be the sourcing. The sourcing team used to create the purchase orders to buy the material or services. Once the purchase order is there, in that purchase order, everything is going to mention, or everything has already been mentioned. What's the PO number? That's the system generated number. What's the nature of service, how much is the quantity is going to be there, what's the per unit price, and how much is going to be the amount for that PO. Once this material is received at logistics or at our gate, the receiving material and doing the delivery of that. The receiving the material, it means this is going to be create the GRN here. That's a goods receipt note. And the moment GRN is there in the system, this GRIR is going to come into the pictures. So the trigger point to create the GRIR is logistics, or the person who is doing the GRN, goods receipt note, in the systems. He is going to do the GRN based on the invoice, and whatever the purchase order is there, he's going to mention the purchase orders, and from that purchase order, he is going to mention the quantities what's there on the invoice. Either you have the service POs for your service materials as well, or for the direct materials. So he is going to mention the quantity over there. He has a right to play with only the quantity. As and when he mentioned the quantity, whatever the price is there, that's going to be captured from your purchase order, and the rest is all is going to be there. He just going to do the entry for quantity. Rest, everything is going to be auto populated from the purchase orders, and this is going to be there when you have the ERP. So once he done the GRN, that moment itself, system is going to create the entry, and that entry is going to be your respective expense account debit. If it's related to you don't have the delivery systems for the indirect materials, then that's going to hit to your expense account and credit to your GRIR account, goods receipt invoice receipt account, and this is your liability account. That's going to hit you over there. If it's going to be your direct material, that's going to hit to your inventory receiving account. And when you are going to do the delivery of that, then that's going to be clear from your inventory receiving account. But if it's a direct material, that's going to be inventory receiving account debit to GRIR account credit. If it's your indirect material, that's going to be hit to your P&L to your GRIR account. That's all is going to be based on the your uh, configurations what you have in the systems. If it's going to be hit to your expense and going to credit to your GRIR account. But in the both scenario, either it's a direct material or that's going to be your indirect material, the second leg, what's going to be credit, that's the GRIR account. So once it's hit to your GRIR account, then the responsibility of the business is that to submit that invoice to accounts payable department. That's going to be part of your finance team who are going to receive that invoice. Once they receive the invoice, these guys are going to extract or pull or open the GRN in the systems based on that PO and GRN. Once they open that, then these guys are going to do the reconciliations over there. That's going to be your PO versus your GR and IR. That's going to be your purchase order. That's a three-way match is going to be here. Purchase order, your GRN, goods receipt, and your invoice receipts. Then, if everything is in line, then these guys are going to validate that invoice, process that receipt in the systems. Once they processed, then the entry is going to be triggered here. That's going to be your GRIR account is going to be debit to your vendor account is going to credit. Then these guys are going to do the payment to the vendors as and when that's going to be due. But when the logistic team is doing the GRN, that your GRN is going to credit. When the finance team, accounts payable team is processing that invoice in the system, then entry system is triggering the one entry. That's going to be your GRR account debit to your vendor account credit. Then at the finance end, when finance validated that invoice, then your GRIR is going to be clean in the systems, clear in the systems. But if at the time of processing the invoice at finance end, if any discrepancies is arise, then the GRIR is not going to be clear for that because there is a discrepancies. And that all discrepancies, whatever is going to be, that's going to be the cause of your open entries in the GRIR. Because accounts payable department are not going to do the validate until and unless they have the invoice as per their checklist. And if there are any certain issues in that, then 100% these line items are going to be open as it is in your GRIR account. Since that invoice is not going to be validate, and if the invoice is not validate, then how it's going to be clear from the GRIR account? So that's the reason you are able to see the lots of invoices out there, lots of receipts we have created, but still not cleared from the GRIR. I still recollect I used to be take care of the 100 CR GRIR, and I know how much is really pain is required to do the cleanup of the GRIR. And if we haven't controlled from the day one, then that's going to be disaster for everyone because that liability is there. But the invoice, if it's not reach at accounts payable department, then I'm 100% sure the GRIR is not going to be clean, not going to be clear. And that's going to be a huge task to ensure that's going to be how the control over there. So if you guys also have any ERP and where the GRIR system is there, so it's a request to put the focus from the day one to ensure such kind of mess is not going to be created in the systems. And if it's there, then that's going to be too much tremendous task to do the cleanup of that. So now you know that how the GRIR is going to be work, how it's going to be triggered, and when it's going to be clear. Now, the next we have to jump towards that. What are all the reasons? What are all the cause going to be there to insist or to force that line items to be open in the GRIR? That's we are going to discuss. Meanwhile, if you are still with us, so request viewers to like, share, and subscribe our channel to get a more insight related to accounting and finance. And that's all is based on the practical scenario, based on our own experience. Now, if you see here, this is going to be variable situations, variables or situations when we do the comparison. It's a three-way match. That's going to be the mandatory. Your purchase order, your goods receipts, and your invoice receipts. Then the perfect match, your purchase order, your goods receipt, invoice receipt, posting, and then payment. But if your purchase order, goods receipt, and invoice receipt is not in line, then this stage is not going to be there. So here itself, you are going to do the rejection of that invoice. You are not going to posting that invoice in the systems. And if you are not going to do the posting of that invoice in the systems, your GRIR is not going to do the cleanup. Your GRIR is not going to close. If you have any quantity issues as well, this is the quantity is going to be matched as per the GRN, quantity as per the invoice receipt. Amount as per GR equal to amount as per IR. If it's the same, then only you are going to do the posting of that invoice in the system. And if the issue is there, then you are not going to do that. This is going to be the one of the perfect match. The price discrepancies. This is for quantity, amount, the purchase order, goods received, invoice received, quantity GR, quantity IR. This is going to be there. If the price is too high, too low, how it's going to be work, and the quantity descriptions. So it means that as per the accounts payables checklist and as per the business checklist, whatever is going to be there, that accounts payable team is going to ensure. And if there is any discrepancy, that the invoice is not going to be posted in the systems, and till the time that invoice is not going to be posted, your GRIR is going to be keep as it is open. That's the first. Is your quantity difference, is your price difference, is your any discrepancies on the invoice as well. If your invoice is raised uh, on the different entities address, and you have the invoice and and the purchase order belongs to another entity, and you receive the invoice for that, PO is correct but the address is incorrect, then how you are going to accept that invoice? So you need the revised invoice for that, and till the time you don't have the invoice, you are not going to validate that. Either he deliver the service to you or to other organizations. We don't know. We need to we have to validate that, and we need the correct invoice for that. Then again, you are going to keep it that invoice in the rejections. Then that's not going to be clear from your GRIR. Here is one example as well. Received invoice from the Diudifor LLP for professional fees of rupees 80K. GRN done and shared invoice with AP team for booking. AP team validated that invoice and observed discrepancies in the invoice, mentioned incorrect GSTN number on the invoice. Invoice rejected by AP team. So in that scenario, when the invoice is rejected by the AP team, so till the times they have the correct GSTN number on the invoice, these guys are not going to process that invoice. So till your GRI is going to be open in the system. So this is the one of the scenario for that. And thanks guys again. I hope you gotten more clarity about how the GRI is going to be work. There are n number of reasons. It's going to be your invoice discrepancy, your quantity discrepancies, your PO discrepancies, your address discrepancies, or your tax calculation is incorrect, and incorrect GRN. So whatever these reasons is going to be there as per the accounts payable checklist, then that's all is going to be the causes for your open line items in the GRIR. Sometimes that's going to be happen is that the GRN has been done, but the invoice is not reached to the accounts payable team. So how the accounts payable team is going to validate that invoice? Since that invoice is not reached at their end. So till the time that invoice is not going to be processed, your GRIR is not going to be clean. So there are lots of reasons. So at the end, the moral of this is that once you've done the GRN in the system, it's your prime responsibility to ensure that invoice is going to reach to accounts payable department. And whatever query is going to be there from the accounts department, you have to provide the clarifications for that. If you're not going to provide the clarification to the accounts payable team, and the accounts payable team is not going to do the posting of that invoice in the systems, your GRR account is not going to be clear. That's the concept is clear. That's the process of the GRIR. Thanks guys for being with us, and request viewers to like, share, and subscribe our channel to get a more insight related to accounting and finance. Whatever we have the experience, that all we are going to share with the viewers. So request viewers to be with us and like, share, and subscribe to get a more insight related to accounting and finance. Thank you.